G'day folks, Jim here from FX Charts. Thanks for tuning in 21st of January. Well, it's been a pretty quiet session really. Today it's a New York holiday, Martin Luther King Day. So we haven't seen an awful lot of action. The highlight was the Chinese data really that came out, and that showed still fairly solid growth, the GDP up 7.7%. And the market really hasn't done a great deal, with most currencies remaining pretty much range bound where they were in the weekend. So we're going to have a look at the charts, and as you can see on the euro made a bit of a dash to the downside early on, and it got down to 135.07 was the low in early Asia. It's recovered since then. It's back above the weekend close, currently sitting at 135.60. which actually is quite important resistance. And if we go to the dailies, you can see we're right up against the 100-day moving average here. And on top of that, if I insert the Ichimoku, you can see that we're right up against the base of the daily cloud. So that should be a pretty good resistance. Now, if we go above there, 135.80 here was the low of the previous couple of sessions just there, and above that 136 136.20 where the rising trend line now lies, and that couples in with the daily Tenkan, which is coming south. So I think between sort of here and sort of 136.20 we need to be looking for some sell opportunities. I would give it a little bit of leeway on the top side, because I think a lot of people are looking at this, and so we could get a bit more of a short squeeze, but I think ultimately we are heading lower. The daily charts do indicate that. So on the downside, as I say, 135.07 will be the base. That'll provide good support. Nearer home, this 61.8% support on the 4-hour charts. Let me just get rid of this Ichimoku. The 61.8% level, that would provide support. If we go below 135, then we're looking down here towards 134.5. Don't think we're going there today. There's not an awful lot out. The only real data we've got to look forward to today is the German and EU ZEW economic sentiment surveys. So I don't really think there's going to be an awful lot of action today, but I'm still looking, as I say, to sell rallies for an eventual move lower. Dollar yen. Well, that had a brief spike low. This is a 1-hour chart. Brief spike lower at the Asian Open yesterday, basically following the Nikkei. But it's come back up, and it's trading above 104. And I think we're going to see more of the same today. It's at 104.20. We've got short-term resistance here. It's at 104.25 and sort of 104.35.40. There's good sellers lining up apparently at around 104.5. And I'd be surprised really to see it get much above 104.50 today. There's good there is resistance here in this 40.50 level. If we do head higher, then we may head up to this 104.75 area, but I don't think we're going to see it. But having said that, in the longer term, I still do like the idea that dollar yen is going to head lower. And eventually I think we could take a look at this 102.85 level. Probably not for the next couple of days. We've got the BOJ meeting on Thursday, and until then I think we could be fairly range bound. Cable, that had a pretty tight range today. It's really traded sideways, got down to support at 164, and then headed back up to 164.5. Don't really think we're going too far out of that today. There's not an awful lot out, but we've got some decent data tomorrow. We've got the Bank of England minutes and the UK jobs data. Now, in the hourly charts, well, they're not really showing us an awful lot. The 4 hours are mildly positive, but we have got this trend resistance ahead of us at 164.60. I'd be a bit surprised to see that take that out today. But if we do head higher, then 165.15 is up here, and that's going to provide some decent resistance. In the longer term, as I say, the indicators aren't really conducive of a break high, and I ultimately think that cable might be dragged lower, even if just on the back of a soft outlook for the euro. So, but 164.5 could cover it for today. and in the longer term, maybe 164, 165, possibly a slightly lower range. Dollar Swiss, well, that did break. It broke the previous high back here. Took out, went up to 91.30, but it's failed up there and it's come back towards the weekend's closing levels around 90, 91 the figure. Now I'm not sure if this is a false break or not. If it is, maybe we should expect a bit more of a run down to 90.70 or so. I think that should hold, and we take another leg higher. But if wrong, we might come back down here and sort of test this 90.50 area. I think once again that'll possibly be a buy, but if that was a false break to the top side, we may be in line for a bit more of a deeper correction. And if we go and look at the shorter term chart here, 1 hour chart, as you can see, we've got the support here around 90.70. Now if we head below this sort of 90.50 FIBO support, then I do think we're possibly heading back down here towards the sort of 90, the figure level, possibly a little bit lower. 89, 85 is where it got down to the other day. I don't think we're going there yet, but we do need to bear in mind that there is a chance of that. But overall, I like the dollar high, and I think eventually we're going to take another look at this, or take a look at this sort of 91.5 area. And if we can get beyond there, then we're possibly headed up to this sort of previous high here, around 91.90. So that's about it for the dollar Swiss. On the Aussie, well, the Aussie, let me just blow that up. The Aussie, having hit a low yesterday, 87.56, it's recovered since the Chinese date, although it's just drifting off a little bit at the moment. Aussie Kiwis keeping it under pressure, of course, as well as some general selling against the US dollar. But the Kiwis just spiked higher given the outcome of the CPI. I'll show you that in a minute. But the CPI was higher than expected, so that's taken the Kiwi up. But if we can get above this sort of 80.30 area, and it's not looking all that likely at the moment, but if we can get above there, then as you can see from here, there's no real price action. This is the black hole after the jobs numbers last week. If we can get above this sort of 80.30, 80.35 area, that's where this initial FIBO level, then we could head back up here to 88.80 or so. On the downside, as I said yesterday, we've really reached some very strong support down here. This is the base of the channel down here at 87.30. There's good support down around here from this previous low. This is a multi-year low down around this 87.68 level, I think it was. So 87.50.60 is strong, and we've so far bounced off there. The 4-hour indicators are positive, so I kind of like the idea that just maybe we're building maybe a small head and shoulders base, and if we can take that out, then maybe we do see a bit of a squeeze higher. So on the day, 87.50.60 to cover the lows, and it could be that 88.30 covers the top side as well. So maybe don't look for too much, but if we do break beyond that, then we might see a bit of a squeeze higher. The Kiwi, well, as I say, the Kiwi is literally just released its fourth quarter CPI. That was up 0.1% quarter on quarter, expected minus 0.1%, and the annual result was plus 1.6 as opposed to an expected 1.5. So the market's now looking at an RBNZ rate hike again. Now we're sitting up here against this strong resistance that we've previously mentioned at 83, the figure. If we can take that out, then I think we're probably heading back up here towards this sort of top around here, so 83.60 or so. The hourlies are looking positive, and the 4 hourlies actually have got some. They're trying to build some positive momentum. So in line with what we said again about the Aussie, I think we may head a little bit higher. But with the Kiwi on the dailies, it's still very choppy, and I'm not really overly enthusiastic one way or another. Currently at 83.15 up here. We may yet take another look at this previous high. This is at 84.32, I think it was, of last week. but I'm not really convinced either way. And as I say, it is very choppy. I'd actually tend to leave the Kiwi alone. You know, we've been on this sideways trending consolidation really now for quite a while, and I think that may well continue. So all up, I don't think we should be looking for too much today. As I say, the ZEW is the highlight of the day. Not an awful lot to look out for. As I say, we've also got the BOJ on Thursday, the UK jobs and Bank of England minutes on tomorrow. We've also got the PMIs on Thursday, so maybe the action waits until then, until we get the release of those. So until then, keep it fairly tight, I think. So that's about it for today, though. Have a very good day's trade, and we'll talk to you tomorrow.